Hey guys, it's Mehra here. I'm the CEO and founder of Mint Invest, and something else that I've been cooking up in the background, which you'll know about soon. But forget about me. I'm excited to introduce the man, the legend, Kesh. And if I tell you what he does, you might, on the face of it, think he's like Darth Vader. He's from the dark side. He is a builder and a developer, and he's here to flog you some overpriced shit that won't grow on belly, or is he?
Wow.
So we're gonna find out.
Wow.
But let me
Okay.
say this. He and his business partners are working on the crowning jewel, which we may or may not unpack. But we're here today to have a very real conversation.
We are. We are. Thanks for the intro. Hello, everyone. My name is Kesh. Before more than business, I think it's a very nice friends. And thank you for having me. It's an honor to be on your podcast, and I know you'll get millions of views. Let's put it out there, huh?
Millions of views. Let's
millions of
manifest
views.
millions of views.
The only rules I think we set up for this podcast with everyone here is we're going to be honest.
Absolutely, brutally honest.
Brutally honest, and we're going to hopefully along the way give people value. One thing I hate doing is telling people what to do, but what I love doing is sharing about what we're doing and what works and what doesn't work. So, and let's hope we can deliver a lot of that in today's conversation.
Absolutely, and disclaimer: this is our first podcast, so we might get it wrong. But one thing you can walk away with for sure is that we're going to tell you straight up how things are, what we know about the industry, add value to your lives. And also, we're not going to tell you about the next 5 hottest growth suburbs in Australia, or where to get the most tax benefits, or how to do a small micro development and turn a block of land into a 1 to 2, 1 to 3.
You can have the link you can have the link to Mint Invest in the video below. You can speak to one of the senior strategists, or even Xavier for that matter, if you're lucky enough, and Xavier gives you a bit of time, but and get answers like that. So we genuinely want to give you value. We want to have an honest conversation about behind the scenes of the business, the evil builder developers, new versus old, and other things.
Yeah, and if you're after coaching and property investing 101, there's plenty of guys out there online. We're not here to talk about that today, but you'll definitely learn some stuff. So let's get into it.
That's cool. I know I'm going to be interviewed, and I know the man behind the camera has got a few questions, but let me ask you something.
There's multiple people out there, not just one guy.
But a very important thing I think a lot of people forget along the way, and now there are a lot of buyers agents and investment advisors, some good, some not that so good. Everyone's hustling away, everyone's trying their best, I guess. Why the business? If just buying property is the ultimate way to create wealth, Xavier, why do you run a business?
I promise at the outset of this conversation to be really honest. Mm-hmm. So I'll tell you why I started Mint Invest. Mm-hmm. And it was purpose-led. And the reason why I do things purpose-led, not because it's a buzzword or corporate social responsibility or anything like that, is because I think at the end of the day, we've all got a finite amount of time on this earth, on this plane, with our family, with our loved ones. And it's an experience to be cherished and treasured. And I also think if you're going to go and work your nuts off, I don't know if I can say that on camera, for 40, 50, 60 hours a week, in my view, I think you better make damn sure that it's going to be worthwhile. And for you, it's something that carries a meaning beyond the dollars. Anyway, winding back to 2014, I had this idea to build an app to connect students with tutors called Aloki, because I genuinely wanted to use my career and my talents to try to prove the world. Obviously, Maslow's hierarchy, making enough money to put a roof over our heads, have food, raise a family, travel, all of that stuff. But then with the extra, I can't take it with me when I'm gone. I wanted to make a positive impact. So that was my mission behind Aloki. I then started building it in 2016, and I actually launched the app in the App Store. What I didn't realize, and I wish someone had come and told me, is that the problem with the two-sided marketplace is you probably need at least $500,000 budget on either side.
You do.
Because marketplaces do not make stacks of money. They're a volume game. It's a database game. It's a network effect.
It is.
And so then anyway, long story short, I ran out of money in 2018.
Yeah.
Prior to that, I'd worked as a property investment advisor and buyer's agent because people thought I was good at numbers, good at property, good with people come work with me.
Which you are. In fairness, you are. You're very good at that.
I paid him to say that. Anyway, so...
no, this is not paid. Genuinely, he is.
Thank you, Kesh. Yeah, so I thought, well, I know I can't go back to corporate. I won't be able to push the app. I know property. I know a thing or two about building business. So I thought I'll just start as a one-man band, trying to connect buyers with builders that I knew. from my previous life. And
which,
so that was
which is, again, a very important part because, again, not all of us are made the same. Yep.
Yeah. And so that started off with me, a phone and a laptop.
Mm-hmm.
And, you know, it started off like this. I did 2 deals in my first year. Then the second year, once I focused on it full time, I was still doing it low-key as well. Went to 20 deals and so on until, you know, here we've arrived at Mint Invest. This was meant to be my side hustle. Now it's my main thing. So initially it was a means to an end so that I could do something good with my life and my purpose.
Yep.
But what I've since realized is we've helped hundreds of clients now and we get a real kick out of this. We achieve results for them which are truly life-changing, I think, because clients are making hundreds of thousands of dollars in uplift over a 2-year period. And I think it gives them options because now my view is this. If you've achieved a certain level of financial comfort and stability, then you can start to look beyond.
Yep.
Look beyond. Can I pay my mortgage? Can I pay my rent? Can I put food on the table? Can I go on nice holidays? Can I have that car? Can I have the watch? Can I have the shoes? Whatever it is, can I have the bag?
Mm.
There's only a certain level of success, satisfaction that will bring you.
Mm.
So anyway, now I'm too deep into Mint Invest. We're doing good work for clients. I get a real kick out of business, but for me, honestly, some people would really get a kick out of building a property portfolio. I get a kick out of building business because to me, it's a form of expression.
Mm.
And it helps people. So long story short, that's why.
That's a really good answer. Just anyone who's watching this, if you're in business, so you're planning to go into business for yourself, one thing that I would really recommend, and again, there's no financial advice, but real estate is one of those things that you almost are able to hedge poor business decisions, if you will. So if you go and buy a property today, let's say you were in a job, you went and bought a property, it went up in value, there was sufficient equity there for you to invest in a business. And say you kept your job and you side hustled while it became real. And let's say you dusted $200,000. Your property, if obviously conditions applied, if you bought in the right place, right time, so on and so forth, and the right property, the 200,000 will come back because the property is still there. The underlying asset is increasing in value. So I think business and property together are a fantastic combination because along the way, as much as business can give you, I truly believe more than real estate, more than anything, business will give you the most exponential returns on your investment and time, but it's also the highest risk because there's no guarantee of anything. It's capital, ideas, execution, market timing, lots of luck.
It's grit.
It is
It's
grit.
determination. It's pain tolerance.
It really is. A lot of pain tolerance.
It is getting up and moving forward again.
Yep. But along the way, if one can put some money aside, it's great. And something you touched on, I digress here, but I think this will add value. I've always said this: the pathway to financial freedom. And again, nothing against the property guys. I'm one of them. But it's the pathway to freedom. I feel is more layered than people make it out to be. So it's not about just having a debt-free home and this and that. It doesn't happen overnight. But I feel the first step is I earn X amount of dollars working for someone else. Can I replace that X amount of dollars working for myself? So even if it's a commission-only role or a profit-sharing role or whatever it might be, right? You go into business with someone. That's step one. Then step two, can I then use this income? I bought my first step of freedom. And the only way you can do that, generally speaking, at least speaking from personal experience, is if you have 2, maybe 3 years, depending if you've got wife and kids and school fees and tutoring. If you've got 3 years worth of living expenses that covers your current lifestyle. And the easiest way to do that when you're employed is have PAYG income, buy a property, let us do its thing while you save up a little bit.
Yeah, it's a lot more simple than when you have a business. The amount of documentation you've got to give to the banks.
100%.
And the sort of, creative conversations
that
a business owner has to have with their accountant.
It is, because I think that's where property becomes a big part of it, because if you have a PAYG income, your first layer is, okay, how do I replace this income by not working a job? I don't think there's anything wrong with working a job. I think Sundar Pichai, the CEO of Google, works a job and he gets compensated quite well. But there are very few of us who would end up with $100 million payout from a corporation. And there's something beautiful about creating something, I guess.
Absolutely.
And again, you don't need to do something crazy or big. You can work in a profit sharing structure with an established business. which I think is the smartest thing to do, really. So you've got zero startup costs. It's just your time, effort, grit, and your skills, or a commission-only role, like I did as a real estate agent at some time. And you get yourself to a point where your income is replaced, your job income is replaced for 3 years. That could be a combination of equity and savings, could be anything. And then from there on, you work on profitability in whatever you're doing. And then you go that debt-free house, and then you go the passive income, and so on and so forth. But so the path you're going down of helping people buy property and your passion for business, it actually really marries up.
Yeah.
Because whether they realize it or not, and there's no right or wrong, a lot of your clients are actually in a position where they might go, you know what? Do I have the baseline? And again, you guys are experts at setting up strategies. So they do their numbers with you. They sit down and go, right, do I have the baseline? Have I achieved this? Is this a time now for me? And generally speaking, for most people, it would be 2, maybe 3 properties that have matured in the market, and a combination of savings that should give them that baseline to then go to the next level.
And what do you think is, once they've reached that next level, what do you think that means what does it mean for you?
Very much like you, I think there's no limit, and it's again not chasing profits, it's chasing purpose. And I know it sounds tacky, but it's really true. I just feel like when you create something and you create it out of passion and then becomes profitable, and so you can make it sustainable and serve more people, then it's about how much more impact can you have with this? How much more bigger can this get? How much more better can our service or product get?
How many more people can we?
How many more people can you help? But again, I'm not going to sit here and say I'm Gandhi. Like, of course, profit is a big part of this.
Absolutely. Everyone needs money. Everyone needs their currency in life to take care of their families and their aspirations.
Of course, but it's incredible to be in an opportunity where you actually love what you do, even on the bad days, even on the tough days. And then on the good days when you're getting rewarded for it, it's extra special, I guess, because you're still, with the grit thing, like we're pushing through even when there's no profit. We're pushing through when there's money lost on the other end and you're still delivering.
That's really interesting because I think a misnomer in this industry, especially in the space that we play in, which is mostly dealing in brand new off the investment properties.
Yep.
In those growth corridors where there's a balance of yield and growth.
Yep.
And tax depreciation, there's a misnomer that they don't represent good value. They're overpriced. And that guys like us, like a Mint Invest or you guys, are just taking home fat checks. So I'd like to unpack there for a moment. So tell us about when...
Ask me, you guys can ask me anything. I'll
putting profit in the back seat. What does that mean?
So I'm gonna be as transparent as possible to really explain to someone how the real estate industry works. I think it's very important that, because I really want to put an end to this. There's no right or wrong. There's no new properties better or all properties better. I have zero bias. If I was speaking to a friend, from a business perspective, of course I have a bias. But neutrally, I have no bias.
We got to pay the bills.
Yeah. But one thing which is very important to understand is, what is the outcome you're after? And do you really understand the moving parts of real estate? So let me peel back a few steps. And this is going to be a long-winded answer. So you can listen to it on 2 or 3. But if you really want the honest truth of how the real estate market works, I think this is a time I'd really pay attention. So the government, your state government and your local council, a developer, then a builder, then agents, then customer, right? Then comes property managers, then insurance providers, and tenants, and these are all various parties along the way.
Home loans,
mortgage brokers, there's so many people that are
the council certified.
So many people, right? Part of this little large economy.
Oh, and also the influences.
The influence.
We're trying to be there.
Yeah. So let's just peel it back. So first, I think you had a very good point. putting large profits away. So let me put this way. The easiest way to go and get something is at its inception.
Because let me just call out one thing. I'm sure there's people that might be watching this who might be thinking, I'm not going to talk to a Mint Invest. I'm not going to talk to a Cash. I'm not going to talk to Eternal Homes. I'm not going to talk to these builders because I'm going to get ripped.
Yep, and that's fair.
There's just crazy commissions in these deals.
And that is absolutely fair for someone to think like that. Or
there's players in the space who are pro-established property and they don't like groups like us because it doesn't suit their agenda or their business model. And so they might knock us. And we could equally knock established buyers agents. But I truly believe, just sidebar, I truly believe there is a time and a place to buy an established property. Same with a time and a place to buy a brand new off-the-plan property. It just really depends on where you are, risk appetite, funds available.
100%.
But I'd really like to hear it from you because you are the builder and developer.
So just going back, right? The most profit is made for the person who takes the highest risk, right? So there are different factors of why properties grow, and I'm not going to be here and act as an economist and tell you infrastructure, employment,
Does that risk-reward phenomenon exist just outside of property business as well?
Yeah, 100%. It does.
Like in stocks?
Everywhere.
Starting a business?
Everywhere. So it's you can have a very... Okay, so if I go and buy Apple shares, great point. I go and buy Apple shares.
On the class.
Yeah. No, if you go and buy Apple shares, for example, right? You are then now buying something which is blue chip, established, and will give you almost a fixed return if you look at it from a 10-year or 15-year scale, right? You go and buy established property is the same thing. It's already factoring in the train station, it's already factoring in the shopping center, it's already factoring in whatever, right? If it's got development potential, it does. And having development potential and you having the money to execute on development potential are two different things, but so on and so forth. Now, in the new space, essentially what we're doing is we're cutting out as many middlemen as possible. So what we're going and saying is, right, the most amount of money and the most amount of risk is at the development stage. Because at this point, you're going and buying land which may or may not be ready to be built on or may or may not be zoned. And you're buying a large parcel of land and you're not going to work with the state government or the local council to get approvals in place for housing. Mm-hmm. Now, why do these people want more housing? Because there's no housing and people got to live somewhere, period. So more housing needs to be created. Now, whether that looks like apartments, townhouses, house and land, whatever it looks like, right? Now, at this stage, the only people involved, the only parties, everyone needs to understand the more hands something moves through, the more margin or tax and things are added to it, right? So a T-shirt leaving China for $2, by the time it gets in the ship, you got the container fees, you got the fuel, then you got import duty, then you got local transport, then you got the retail margin, bang, 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 you're buying a T-shirt for fucking $50. Right? And then you go, oh my God, he bought it for $2 instead of... No, maybe the purchaser ended up paying $25 for it too. Right? And there's marketing costs, payroll tax, GS, like it doesn't stop. Right? So in our world, we're going, right, where's this parcel of land? Do the fundamentals one exist? Right? Now let's assume that this exists, the fundamentals exist, and let's talk about looking at when everyone thought that Sydney finished when, like, after Chatswood, and I said to someone, hey, come and buy in Kellyville. And you were like, what? And I drove you up there and all you saw was cattle. And I'm like, this is going to be something cool. And he thought I'm swindling you out of your hard-earned money and telling you a false story. But where else was Sydney going to go? Yeah. Where else was the government going to spend money? Where else was there going to be affordable solutions for housing? Where else, when people go, where else will government make more money? Through stamp duty, through land tax, through construction, through innovation. Now we have the metro, right? People think about these things now. But if one can go at the point of inception and you understand what the government's planning regulations are, what the goals are, and you can go right when the developer's getting started, you've cut out so many middlemen. Now, let's just say you missed the developer. Now you got to buy land off a real estate agent or a land agent, right? Now let's just say you missed that whole thing together, then the developer got involved. So the developer made profit, and as they should, for taking so much risk and paying millions of dollars and holding it for years and years and working through approval processes and so on and so forth. Now, this block of land has now reached a land agent of which a builder has bought it. Now, the builder has gone and they have paid stamp duty on the land. They have paid interest and holding costs. They've built the property, and now they're going to pay income tax and GST on it because they bought it under a business. And they got to hire an agent. So now an agent is involved. Now the agent sold it to some mum and dad who bought it, right? We want a completed home. The mum and dad have moved in. A few years have passed. There's more housing that's come in. Now RP data tells you this has gone up fucking 50%. I don't know if you can swear, beep that out. But now someone else comes in who's an expert and says, here's an RP data report. Suburbs gone up 50%. Historical data, which is true. And the median house price here is $2 million. And I will charge you a little bit, and then I will go and get you something below the median, and I will tick the 4-bedroom, 3-bathroom, 2-car garage, find your comparables, order 8 valuations after you've bought it, and show you how much equity you've made instantly.
Send a CMA report, of course.
Right? Now, I am not discounting what anyone is doing. The developer, when they sold it, they wanted to make a profit. The builder, when they sold it, they wanted to make a profit. The agent made a profit on the commission, which is okay, and as they should. Then the person who bought it off the agent is on selling it because they want to buy something else, so they want a profit. And now you think you are getting the best deal on earth because that's what someone is telling you, but you're buying retail. It's like buying water at the airport, not even Woolies.
So you're saying we're taking the client, walking them up the mountain aquifer?
Yeah, basically. So again, depending on the type of product you're buying. Now, if you're an expert,
take them to where the icebergs are,
yeah,
and create the river.
Essentially, right? And you are getting a part of the developer's profit. Now, let's go back. Let's talk about a few deals that we've done together, and I'm not going to name drop suburbs and stuff like that, but people have seen a 35% uplift in less than 12 months, irrespective of what the market's been doing. It's because every release, the developers increase the square meter rate of the plot of land.
Because in turn, they are controlling the supply to a degree, aren't they?
They are. But imagine this. So imagine this round table. I don't know how many people can see this, but imagine this amounted to 10 slices, right? Each slice being a stage. Imagine this is a pizza. And now this is a new area, and I want to incentivize people to be living here because the government has promised infrastructure, and the infrastructure is yet to come. Might be 10 years away, right? So it might be slightly more inconvenient for people to live here. So what do? I go, right, I'm going to give the first slice of pizza, which is, let's assume is 500 square meters, for $500,000. Which just, and the next suburb over is almost double that, or half, like very close to, right? It's 700,000 for 500 square meters. It seems like value. Better infrastructure, better parks, cooler stuff coming, there's hype behind it, cool display village, so on and so forth. Someone buys a block of land and they want to buy it because they want to live there, they want to build their dream home. That's the first type of person who moves there, right? Then the developer goes, hey, the next 500 square meter block, what I'm going to do, I'm not going to do 500 square meters. The next release is going to be 400 square meter blocks, but again for $500,000.
And they can sell more in that same slice of pizza.
Correct. Then they'll go, I'm going to do 350 square meter blocks for 500,000. And the reason they're doing that is they know, okay, give or take the build price is 500 grand for simple math. So in the first release, a house and land package was $1 million. Second release, house and land package is $1 million. Third release, house and land package is $1 million. But what you're getting for that $1 million is shrinking.
A little bit less land.
Little bit less. So what happens to people who get in earlier stages? So irrespective of what the market's doing, with every release, you're making money. Now, one forgets, this is just the development side of it. One forgets that construction is highly sensitive to material, labor, availability, and costs. And a builder has to constantly balance the idea between having quality workmanship, quality suppliers, and timely delivery.
Yeah.
Right? Because sometimes I might need to pay a little bit more to get something done a little bit faster, or pay a little bit more to get better materials on site when there's a demand or a backlog for shower screens, let's just say, or we've had the worst rains and we couldn't grow any turf, right? All these sort of scenarios. So with every release also, what you got to understand, even though you're getting a house on land package for $1 million here, that house is 200 square meters. Now the house is still $500,000, but it's 185. It's still 500, 173. So what you're starting to see now, there's a whole meter square arbitrage happening on both land and construction. And that's what today in Sydney, we're in Sydney, people thought it was ridiculous to see a 250 square meter block of land with a double-story house sell for $1.3 million.
It happens all the time. Oh, wait.
So, but imagine the guys that went and bought it. It's like going into an IPO and you got to get it right. Now, speaking of profitability and people parking large commissions and doing this and that and the other, irrespective of what the commission is, right? One, there are no commissions. There's a marketing fee. And the marketing fee is given because there's wholesale and retail. So let me take 2 steps back now. Let me explain the construction industry now. Let me explain retail. Retail are guys who run ads on radio. They have beautiful display homes. You go through, everything is starting from $299,000. So you're walking through a house which is 20 bedrooms, 50 bathrooms, and it starts from $299,000.
Sounds like a palace.
Yeah, and they've always got specials on. You're gonna get 60 grand worth of inclusions if you sign today, right? And if you turn around and say, mate, just give it to me in cash, and they're like, no, we can't. We'll give you 60 grand of inclusions signed today, which is cool because their model is their retail model. So they want to bring a person in, show them a flagship product, get them to pay a deposit, and then let them choose every little thing. So I'll give you an example without naming any builder. This person, everyone I hope who's watching understands what soft closed doors and drawers and stuff is. Mm-hmm. So they had a promotion where they said free soft close in the butler's pantry. So when you experience a soft close and then you go outside and it's not soft close and they go, oh, but we want soft close here too.
Yeah.
They charge $90 per hinge. Cost $3. You can go to Bunnings and get them for $3. Even if you had builder's margin, $9.
So that's a lot of money.
Right?
They're adding profit there.
But yeah. It was free. So their model is bring people in, give them the cheapest price possible, walk them through the display. Now, building a display home, getting access to land, you got to go buy land. And if you're in a good display village, in any capital city, land is anywhere between $700,000 to $2 million, depending on where you buy this land. Then you're building a display home, which is anywhere between $1 million to $2 million because you're building something flagship. Now, if you're a really, really big builder, some of your electronics and some of your kitchen appliances and so on and so forth might be given to you for free by the supplier just to showcase stuff. But they also have to deliver X amount of upsells for them, right? So that's their retail model. Someone comes in, base price $299, and they go, oh, but site costs are separate and rock removal is separate and blah, blah, blah. And if you've ever built a house, you might understand. What the world you guys work in, the world I work in, is essentially we've democratized what big scale developers do. So guys who do apartments and townhouses and stuff, which we don't do. We predominantly work in the house and land duplex construction space, 2-part contract space. But what the house and land and townhouse guys do is they basically buy the land, they build the thing, have their profit margin and finish and deliver a finished product. What you guys are doing is basically giving them the wholesale build price that a developer who's doing 50 townhouses is going to get in construction. One person, right? So when you go and sign up with a build partner, you're going, right, I need you to give me a wholesale build price. That means you get top inclusions, pre-selected staff. So there's less customization, of course, but it's pre-selected staff. There's no display home, sales agent, nothing. And there's a marketing fee given by the builder because it is way cheaper for a builder to pay a marketing fee and have a very sharp build price than to have a display home model where there's loaded commissions on upsells and so on and so forth. So if you really narrow it down where you're getting access to land directly from a developer, you're getting access to a wholesale builder, like you can't, I don't have a display home. There's no way for you to go. Like if you sent me a customer and said, hey, they want to choose, I have no facility for that, right?
Yeah.
You want cutting edge research, get into a location early, get land directly from the developer, get the build directly from the builder. Like there's no middleman, right?
Yeah.
That fits someone's strategy, that helps them get this uplift. You are helping them manage the entire construction, contractual, finance process all the way up to renting it out. That is insane. You've cut out so many people.
So many people. And I suppose the buyer, the investor, they're working with the builders, with the council, with us to create value. That's something that didn't exist before because they're providing housing.
And without just, like, we just recently, and someone from your team did it, did a duplex deal, and we put that together. And this is a perfect example of a duplex deal where a bank, even before construction, has come back and said there's $200,000 uplift on it. That was a bank valuation.
And just for the people out there watching, context, when we say that there's 200K uplift without it being constructed, what we mean is the bank would have valued it from looking at the block, maybe not even going out to the block, seeing it on a site plan.
Yep.
And then looking at the drawings, the construction drawings.
Yep.
For the proposed build, right?
Yep. And said at completion, this is where we value it.
So basically what the bank is saying is once he'd completed this, we think it's worth 200K more.
Now imagine if that was, sorry, jump in.
Is those bank valuations, are they based off if it was completed now or when it's completed?
No, completed now.
Yeah.
So
it's
great
instant.
question. Great question from the audience over there.
Yeah.
The audience of one.
No, but it's a really good question.
What it means is if it's on signing the contract, which is what you need to do in order to get the bank valuation, right?
Yep.
The bank says it's worth 200K more.
Yep.
And it takes, how long will that duplex take to build?
With that process that we followed, again, the wholesale process, there was a CDC approval. Approvals take probably 3 months unless the retail DA process. Construction time tops weather permit 7 months.
7 months. So let's just
7 plus 3.
So let's just
10
say
months.
It blows out to 10, 12 months, right?
12 months.
Let's be really conservative. 12 months. If you buy, and I know this deal was bought in an area where the compound annual growth rate for the last 10 years was 8%.
Yep.
8.8. Thank you.
Yep.
That would indicate that if you take that 8.8%, call it 9%, the package price in this example was 145. And we're looking at an end value of closer to 130K, 150K over and above. But they've already told us that they're prepared to give it a valuation of 165.
Yep.
Is that correct?
That is.
So then we would expect in 12 months' time, it's probably going to be closer to 1.7 to 1.8.
But Zavet, this is exactly going back to my point. The only reason for that is someone like you has helped a client do a wholesale deal. Because if the land developer sold it through a land agent, then the land price would have been different. Then if the builder had built it and sold it as a completed each side, that $200,000-$300,000 that your clients are making now would have gone.
Yeah.
Now
that's pre-tax.
Yeah. And now someone's asking me why you're so charitable. The real answer is we don't have so much money to go and build 50 duplexes. So there's some that we will do, and we will sell as finished products with a bigger margin to the retail market. But your clients get an opportunity to get very, very similar returns without getting their boots dirty.
Yeah. Without having to become a developer.
Yep.
Talk to the council.
Yep.
Work through a DA.
Yep.
Which is something I'm going through right now. And I've just realized how painful the process is.
It is.
It's a real process.
It is. So, again, going back to your thing, is it all loaded? Yes, some deals are. Some deals are depending on what you're buying, depending on what you're working with. It's the same thing as when, again, not knocking anyone, but it's when buyer's agents tell you to buy in mining towns for $200,000 and they go and shop for 8 vals to show you it's worth $280,000.
And you're getting $275 a week in rent.
Yeah.
And it's cash flow positive by $10 a week.
Yeah. So, dude, it's when you adjust for tax. So again, they're good players and bad players. Like with established property, if I was buying in the eastern suburbs and if I wanted a very specific type of house and I had the money to go buy it, right? I would hire an expert who's genuinely going and finding me an off-market deal because that's how deals happen. If I was hiring someone to go find me who's a development specialist and I wanted to go and acquire a $20 million site, I would go pay someone to do it, even though being in the industry. So I have no problem with buyer's agents or established properties. If I was looking for a very specific location because I wanted to build my dream house in that particular street because, I don't know, mum and dad live down the street, I would get a buyer's agent and they would door knock everyone and convince an owner to sell it to me. You know? So there is use cases. I've got nothing against it. And yes, there is shitty new property, which is loaded with commissions from developers.
But then also there's shitty established properties.
Yeah.
That are riddled with issues.
But it's not fair for you to just paint everything with the same brush.
Absolutely.
And that's where I'm coming at. So I think it's very important, and I hope that gave you guys a bit of insight where there's many layers, and the cheapest time to buy something is at its inception.
At its inception. Absolutely.
And that's all you're doing. And if it makes sense to you, and if you want to have the arbitrage of developer profit, market growth, early access, like you guys know this, we have a wait list to get into some of these estates because they're so high demand.
That's right. And the land developers are intelligent, obviously. They're in bed.
They're like Stocklands, for example. They're public listed
Yeah.
Like, we're talking blue chip, public listed companies that are responsible for building
communities.
One of the best communities. Yeah. So now when you go and say, oh, but, you know, I think this is, I even remember, bro, like going back, I remember this is even before, like in another lifetime when it was just about getting deals done, right? And when I used to drive people up to Gregory Hills and say, this is where we're going to buy, and properties are $650,000.
Yeah,
right?
I remember going to Gregory Hills, Leppington, Owen Park, $550.
Yep.
I remember seeing.
Yep.
Back in, I think, 2018, 2019.
Yeah. $650,000.
On 500 square meters.
Yep. And even then when they would buy it, because the banks weren't aware of the area, the region, and what was happening, they would compare it to Campbelltown because there were not enough comparables. And some people didn't understand this, and they spoke to their friends and family, which is fine. And they were a bit nervous about the purchase. But what they didn't realize is there's billions and billions and billions. So you're basically buying a little NVIDIA chip or 5 shares in NVIDIA, and there's billions and billions and billions of dollars from the government, from the developer, from commercial tenants like McDonald's or Bunnings and Officeworks that is coming in there because they're taking a long-term bet. Mm-hmm. They're taking a long-term bet. When you go to places, and again, there's no right or wrong, where this already exists, that's factored into the price.
That's right.
That is factored into the price. So I think it comes down to what you guys do, and you guys are really good at it, is identify your strategy, figure out your risk appetite. If you're very low risk, new property is not for you, period. There are moving parts.
There can be delays.
There can be delays.
There can be curveballs.
They can be. And it's again, now you're trying to be a mini developer.
That's right. That's exactly what I was going to say, because in what brand new offers to the investors that have the appetite for it, is it's on a much smaller scale and a much safer environment, a little bit of developer margin.
And when you have guys like you guys who do such a great job of managing the entire process for them.
Yeah.
They have someone, because again, the problem here where wholesale builders like us don't do a great job is we're used to building for developers who want 30 townhouses, right? We want to build high quality, precision, a tried and tested template that works, that ticks 8 out of 10 boxes, right? But the customer service aspect doesn't exist because we've always dealt with other businesses. But that simplifying of the process, understanding is when you guys come in. And that is a big part of where doing a duplex or doing a house and land or doing whatever it is shouldn't be that difficult or scary, because they have a human on the other side of it who's holding them hand, helping them through, helping them with their loan, explaining how the structure works. And you guys are great. One thing I'll say to you guys must sit in front of people and do their numbers and say, hey, look, this is not for you. And, there's a different direction.
Yeah.
Because not everyone's got an appetite. Not everyone's got the risk appetite or has the patience or is interested in the profits and just wants something now and done. And I guess there's a different market for that, and we can't please everyone.
That's right. Let's talk really briefly about what happened in Melbourne. We had a couple of instances where we both had to take a hit on the profit.
Oh, huge. So again,
let's unpack that story. What exactly happened?
Essentially, these were supposed to be completed products, and
they were single contracts.
So houses. So these were
suitable for SMSF purchases, right?
Correct.
I think one of them was.
No, anyway, all of them. All of them was. The biggest challenge, I think, was with those is that was out of our norm, and it was our general norm is complete. So basically, fixed price, turnkey, and people now use these terms very loosely. There's no buts. So when we say fixed price turnkey, as in there's zero variation unless you ask for it in terms of changing white and black taps, and comes with landscaping. You basically need, your tenant just walks in, starts renting it. Dishwasher, everything is in there. These were supposed to be that, but they were a joint venture between the land developer and the builder. And where the issue came about they were originally targeted at a retail market for first-home buyers, and then they were prematurely sold. And it was a marketing error. And if you guys weren't in the middle, so people understand this, that property was supposed to be sold at $675,000 with landscaping, fencing, driveway, dishwasher, everything. Right?
That's a huge hike. I think we came in, both our clients in the 620 range or less.
616,000.
616.
Right? So there was a marketing error where it said there's landscaping, there's fencing, there's all of this stuff in there, and there wasn't. So someone's gone and bought this for $616,000.
Signed the contract.
And in the contract it says it's not there. But sometimes people miss it. You missed it. I missed it. They've finished this deal. Now, in the normal world, these people would have just gone around in circles, and contractually, they signed it, they bought it as is, and it was never promised. But because they came through you and our business relationship, they basically got close to 40 grand worth of things done for them, 30 grand worth of things done for them, where the landscaping, the fencing, the driveways, all of that were completed at no cost to the customer. So, and we were out of pocket, both you and me, to get those done. So this again says a lot about Mint almost gives these guys access to wholesale deals at its inception and mitigates risk to a certain level and supports them through it.
We act as a shield.
Completely.
From those sorts of
Completely.
events.
And again, not all builders are made equal. Not all developers are made equal.
Yeah.
So there's a quality check that's happening on your end. There's a process that you guys are following. And one thing that I really love, and I digress here, is not everything is presented to everyone. And strategy comes first. Numbers are clearly done. And you guys do a really, really good job, your entire team actually, at matching the right property with the right customer. And it's just not project sales, if that makes sense. So I think where people need to start unpacking is there's project marketers that charge a large marketing, large inflated commissions on, generally in the apartment space, it happens a lot. House and land, not that much, because there are multiple players in this, and there is a small marketing fee that is paid to people for coordinating it all, but also on the other end, you're not charging them a buyer's agency fee.
Yeah.
So people need to really start not bundling everything up in one basket and really understanding what wholesale deal making is versus inflated off the plan apartments or inferior products and so on and so forth.
Yeah. You touched on something key there that I'd like to come back to. So one thing is the wholesale deal making. So I
Yeah.
think that's what we're in the business of.
Yeah.
And that's how we give clients the uptick because their margin is not eroded by all the other intermediaries that would normally happen on the established property.
Exactly. The reason we spoke about the duplex is that is just the most
direct
recent thing we've
example.
done. That's like 10 seconds ago type of example.
Literally, and it's not me and you saying it, it's the
No,
bank, right?
it's the bank. Yeah.
Yeah. And the banks, for the audience out there watching, they're a lot more conservative than what the actual market
absolutely.
is. Because the bank's perspective is how to protect their risk, not to give you the most money you can borrow. It's how to protect their risk in a market downturn. If you default on their mortgage, with them, can they recover their loan? And so they're prepared to lend you up to a certain point that they have confidence in. But the other thing that I'd like to come back to really quickly is some people in the audience might be thinking, oh, yeah, this is a great fluffy story that we're talking about. We got those clients into those deals, 616, and for some of you watching, you might be wondering, no, we won't disclose the suburb. That's the privilege of our clients. And we buffered them, we shielded them from potentially being stung with having to pay another almost 50 grand because they should have been contractually in at 670, right?
Yep. 675
for the variations because those other bits and pieces were not in the initial contract, correct? People might be wondering, oh yeah, it's a great story. Why did you guys do it? Why did we take the hit? Why did we help out the clients? I have my reasons, but for the people out there watching, would love to get because you guys came to the party as well, and you made negative money on that deal. Tell me a bit about that. And it was only 2 clients. It was only 2 different deals with us, and you had others, I imagine.
I think it comes down to, again, purpose. So I've always said this, and this is something we say in the office quite often. There's something fundamentally wrong if you and I made more money than the client. 1. 2, our word is our bond. So even though we could have thrown contracts in people's faces, I feel we're in the business of relationships. Our relationship to you and thereon your relationship to someone else. And for us, I think what we take very seriously is your reputation and our reputation in that extension. So I just think a lot of times for us, money comes afterwards. And we're not running a charity. We're profitable and you want to build it to be profitable. But we want to do the right thing. And a big wake-up call for us that day was, this is what happens when you go off your standard template. And there has to be better due diligence and so on and so forth. When
you say standard template, you mean this typical build footprint layout configuration?
Correct, because we very rarely do single-part contracts because by the time you finish, again, the more middlemen that come in.
You've got to carry the cost of the land,
correct.
Pay your trades.
But those deals, because we got such a good deal on the land, and those lands were negotiated a long, long time ago for a very, very good deal. They were cheaper than buying 1-bedroom units, and you got houses.
That says something.
And good houses, right? And we knew that there's money in there for the clients, and we said, right, it's profitable for us. There's profit in there for the client, and it was a great deal. And I think reputation and our word means a lot to us, and a few $1,000s here or there is not going to stop us from delivering quality and giving someone peace of mind.
Yeah, absolutely.
And for those of you clients who are watching, you guys were absolutely amazing and patient through the whole process because it was tough. We had to coordinate a lot of things and go back and forth and get those things done. And you guys were amazing with it all and poured money into the project when you didn't have to get it done.
That's right.
So
I'll touch on one thing here because some of what we've been talking sounds fairly lofty, idealistic, esoteric, and I fully agree with you, and that's why we connect so well, and we're friends outside of business. But there's one thing that people can trust 100%, whether it's an established buyer's agent, a developer, a project marketer, a new build property investment advisory like him, is that people will move towards opportunities that make them money, right?
Yep.
And I suppose, you mentioned you guys aren't a charity. Neither are we. We're here to make money. The client wants to make money in the deal. The developer wants to make money in the deal. Property managers want to make money in the deal. The mortgage broker wants to make money in the deal. So does the bank. Everyone wants to make money. And I suppose people should know this. We can make a lot more money together if we deliver good outcomes for clients and get referrals and repeats.
100%.
But the moment our reputation is tarnished, the possibility to make more money in 2 more deals drastically reduces.
It really does.
And so a lot of clients can probably sometimes get caught up in the, we're there to rip them off or whatever, but without making them sound like just another number. Because of the size that Mint's gotten to it at the moment, we deal with a lot of clients every single year. We have aggressive growth plans, but we can only do that, continue doing that, if we continue delivering excellent
But I
results.
think what Mint has also done that sets you guys apart is your investment in technology and data. And I think you guys are really, really good at bringing that information in a digestible manner to your clients. And I think when we collaborate and it's a very healthy conversation and we align on locations, because for us, unlike where people hold, as you know, like, again, the different styles and different objectives. And there's some people who just go to places where it's easier to put a deal together and get a sale, versus people like you and I would do the hard thing and go and find this one block. Like, we do the hard yards and make, because the deal stacks. So I think people that work with you and they get access to data that is forward looking, get access to insights on very detailed cash flow playouts personalized to them, get access to an incredible finance team, and they're on a further support team. You guys have really made it easy for people. I must say, easy for even for people like us to work with you, because you're clear with what your clients want. People move fast. Everyone loves the speed, and we get great deals.
Yeah,
absolutely. Clients get great outcomes.
Thank you for saying that. Yeah, I think another thing that would probably be on the mind of a client, if I was to just put my client on for a second, and I'm sitting here watching this, and I'm thinking, how much money do you make? How much money does Severa and Mint Invest make?
Yeah,
I think what do you think? We just call it out right now?
I think it just depends.
Because I'm happy to share from mine.
No, yeah, and so it depends. So the way I look at it, it's more of a project management thing, right? Yeah. So when you look at an average client's journey from start to finish, let's just say you're looking at a minimum a 2-year cycle. So they bought something, it got registered, started construction. Now, it depends. Some cycles might be shorter. Something registered, you're done in 6 months. But generally speaking, let's just say average about 2-year cycle. You're almost looking at it from a perspective of a builder's margin is about flat 15%.
That's pre-tax, isn't it?
That's pre-tax, and that's gross margin.
That's not a lot of margin considering the risk you carry.
No, so a builder's margin. So that's gross margin, right? So after that comes all the wages, office, marketing, everything out of that, right? And from a channel partner's perspective, I think it averages out to be about 10 grand a year, or a little bit less, for managing these people, managing these deals through. Because again, what people don't understand, a marketing fees is just not, oh, here you go, here's 10 grand. But the idea is you're helping this person from strategy, then to acquisitions, then through financially settling it, legal review, financially settling it, coordinating that, and the entire construction process, to then the introduction to the accountant if they need one, the quantitative surveyor for depreciation schedule, the property manager. So it's an end-to-end process where you're basically taking this person and you're managing them through their journey, and managing me on their behalf, and you're managing property managers on their behalf, and all the other external stakeholders.
We're orchestrating it all.
Correct. So if you really look at it, I don't think it's that much more different from a buyer's agent. In fact, I think you guys are a bit cheaper than a buyer's agent when you really look at the hours.
If you look at the man hours put in, because a buyer's agent, once they get into an established property, unless they're managing a renovation, that's it. And I think But
there's a different managing of the renovation fee, because they've got
exactly, it's not done for free. But what I'll mention from our end is, on the face of it, our marketing fee or the revenue we make is typically between 3 and 4% on a deal gross.
Yep.
And on a duplex deal like the one we talked about, where there's a 200K uplift in the eyes of the bank, we might be lucky to get 5%. That's gross. But then once we take out the fees that we paid to the team to deliver the client the experience of walking them through, getting their finance, getting the legal contract review done, appointing a property manager, giving them all the build updates, and shielding them from any other issues that may or may not crop up.
Yep.
What falls out when we're looking at the P&L the other day, it's between 10 and 12K a deal.
Yep.
That's over a 12 to 18 month period.
Yep. That's what I'm saying. So what it really ends up being is exactly sometimes even lesser than what a buyer's agent
perhaps
makes.
we should go and do a salvage BA.
Yeah, it's quicker.
And get a client into, anyway, it's faster money, right?
It is. So if you had a money model, if your outcome was to help people buy property and make money quickly, you go established.
Yeah.
And again, there's nothing wrong with it, but it's just a fast, because like generally contracts last for 3 months. Yeah. And you're completely, like once you've done them, they've made an offer, it's been accepted, bang, done. Thank you very much. A settlement, my fees is paid, your fees is, everyone's paid, and we're out.
Yeah. Let me ask you two, I've got 2 last random questions for you.
Yeah, no.
All right, great. If you've bought a lot of property, right?
Yep.
If you were the consumer coming to a Mint Invest and you know how this game works intimately,
yep.
But let's pretend you were just at the beginning of your journey.
Yep.
What would you tell the viewers or the client to be wary of when they're talking to a Mint Invest or an established buyer's agent or anyone else like a Mint Invest that specializes in brand new properties? Because there are a lot of players out there, and there's some amazing operators.
I think,
and there's some not so good ones.
The biggest
and the clients have usually worked really hard to get their entry costs, their 100K or their 150K or their equity or something, or they're taking equity out of their home, which is their home for their kids. So how do they mitigate their risks? What should they be aware of?
I think the simplest way I can put it is, if you go and meet someone and they don't charge you anything, and they send you via email or WhatsApp 5 house and land packages, and they use things like cashbacks and discounts, I'd be very wary of that. The reason for that is there's no perfect property. My properties are not perfect. My properties are perfect for some people. And if it's not numbers and strategy led, and if you're unable to marry the right property to the right strategy, because the reality is you do your numbers first. It's like business, right? So if you've got $100,000 to your name, you're not going to go hire 20 people and have an office in the city, right? You're just going to go, okay, this is what I've got. Can I make a website on Wix? That costs $30 a month. Can I have a Google account that costs $20 a month? Whatever it is, right? You're going to work out what you can do, and with what you can have, resources you have, how much profit you can make, right? So if you said to me, I want to do 1,000 deals. I'm like, do you have $3 million up front? Because 1,000 deals will happen after, but having the staff, having the marketing, having the office, having all of these things, all these tools in place to get to 1,000 customers is a whole beast in itself. Similar thing with property. So if I come to you and I've saved my hard-earned money, and the first thing you do is say, don't worry, come to me. I'll give you some cash back. Here's a good deal. Here's some 3. And all they're selling you is on price. And there's no conversation. And even regional pockets. Now, I'm not knocking all regional pockets, but a lot of the regional pockets, even for new property, that's a big red flag. The second thing is, if there's no real strategy, and what do I mean by real strategy? Not some whiteboard session, but actually someone's really looked at your numbers, your tax situations, your savings ability, and your end goal. So are you trying to recycle equity into your next deal? Are you trying to pay down debt? Mm-hmm. Are you using this as a jump start into your dream home? Right? People selling you positive cash flow when your gross or net cash flow is $10 a week. That's a joke. When you take out tax and stuff, you're left with nothing. It's not positive, right?
Yeah.
So these are just a few things. And I think the easiest telltale is when someone doesn't charge you anything, they don't do a strategy, they send you 4 packages. And when you say, oh, I'm not sure I'm going to come back to you, they say, oh, I'll give you 10, 20 grand off. And they just, they're that type of operator.
Yeah.
Yeah. I would be very, very, very of that.
Yeah. Yep, absolutely. All right, great. My second question for you, a little bit abstract, but we sort of open up this conversation about aspirations and the why we do things.
Yep.
Because business is not easy.
No.
And there's property and there's business and money and etc. Just humor me. In 3 years from now, where are we sitting? If we have this conversation again, what have we done?
We have taken Mint. So
and why?
I really believe that what we're doing is great. One, from a sense of what it does for people. I genuinely believe that, and I think if we can do it for more people and build a community, I think that'll be great, because what you said, referrals and repeats for business and community are great, because hanging out with like-minded people, doing things that we love and talking about things we're passionate about, it's just very, very exciting. So I just hope 3 years from now, we're just doing the same thing but more of it, have better impact, better resources, to deliver this to people who want to create wealth through real estate, or even want to understand and build a business, or even, there's something we're working on where there's an opportunity to come and work as an investment advisor or a buyer's agent with a Mint Invest, for that matter. One of some of your past clients, I don't know. So yeah. I hope we are able to get there and do more of this stuff, man. Really.
Yeah, I'm hoping so too. I'm looking forward to that. I know we will.
And I think why we do this is, for me, if I really, really tell you personally, very, very long ago, I can't remember who was saying this, and I paraphrased this, but basically this person said something which really stuck with me. He goes, if you're able to build a business, you've spent 10, 20, 30 years of your life building something that is of value to your family. In the sense, if you do a good job, you've created a revenue machine for your family, right? And the second thing is, and we believe in the effect of compounding. If I'm able to build a business, and let's just say my kids are interested in this, they don't have to start from the $40,000 job, right? It's not that they inherit the business default, but I've spent the first 30, 40, 50 years of my working life from the $30,000, $40,000 job to be able to give them an opportunity. And if they don't want it, at least I've got an asset that I can sell.
Yeah.
Or cash flow for the family, right? And that's why people buy property too. So
yeah, because they want to take care of their family, don't they?
100%. And we've got aspirations for larger developments and master plans and so on and so forth. So going back to the 3 years, hopefully we've got a few clients that come on that journey with us as well, and we're able to deliver something fantastic.
Some of them may be watching this.
Maybe. Maybe.
Yeah, I'm hoping so too.
Yeah.
Leave our footprint. Keshav clothes.
Yeah, 100%.
I think
the man behind the camera. Questions.
Yeah. So, question I had for you, Kesh, was maybe a little bit hardball, but one of the things that we hear a lot, and that a lot of, I guess, a lot of objections that come around, and you see it a lot in the media, is about the quality of builds.
Yeah.
New builds are shit quality. I don't want to buy a new build because they're poorly constructed. They've got all these defects.
A lot of them are, which is true. Yeah.
And so I know that the quality of work that you guys do is very, very high. You use very particular frames so that you don't have termite issues. You do all this sort of stuff. I know it. We know it. At Mint Invest, we're aware of these things because we work with you guys frequently.
Yeah.
But for people who don't have that connection, they don't know what you do, how you do these builds, and members of our team have purchased properties specifically through you guys because of the quality workmanship that you do.
Yeah.
What is it about the companies or the builders that do average workmanship, they don't do things the right way, they cut corners, versus what you guys are?
So I'll answer that. How do I put this? How do you check that is through building inspector. I guess you gotta jump in, and you gotta know people who've built. So someone who's like you guys have already worked with us, But the reality is the building code in every state's a bit different, and the way people get away with it, they're actually not cutting corners. They just do the bare minimum. And generally speaking, there's a difference between something that's cheap and something that is value engineered. And it's value engineering is having certain parts, like you said, having the 90 centimeter steel frames, or having certain blue chip Australian suppliers, for that matter, and having that little bit of quality control. Yes, you might not be the cheapest thing out there, but then you build them like they're supposed to be built. And another red flag that he was telling me is when people use terms, oh, it's an investment, don't worry about it. Someone has to live in it, right?
That's right. It's going to be attractive for the family.
Yeah, and you want to sell it. So I guess to simply put it, there's no way for you to find out unless you work with a trusted partner like yourselves, really, because not only us, you've worked with many other people in the industry, and you kind of are vetting the builders on behalf of the customers, I guess, in a way. But it's a very good question, and in the media and the things that people say are absolutely true. I've seen some horrendous stuff out there, and a lot of people get away with it, and customers get stuck with it because, like an occupation certificate, like as long as you've got roof, wall coverings, windows, and doors, like the house is, that's it.
Yeah. And a roller door in the garage.
Yeah. Yeah. Right. So the only way for you to vet it is another really good thing that we're going to try and introduce really is when we finish builds, we're going to start working on this. We're going to get independent inspectors on behalf of your customers to do one at enclosed and one at handover, just for full transparency. And even our past builds, we're going to now start doing those and providing those reports.
That's a major step.
And if we've had defects, and look, I'm not going to hide from it. You always have paint chips, or someone while finishing up the bathroom crack the shower screen, or this is like the most common thing, right? Or some drawers not working, or someone forgot a fly screen in the second dwelling if you're doing a dual key, or someone forgot to order, like stuff like this happens. It's normal part of it. There shouldn't be structural stuff. That's an issue. But again, what we're going to really start to bring in is transparency. We're going to start disclosing all our builds, all the faults that came with it, how long it took to get rectified, and how many of them were structural. And so far, we've had 0 structural issues. It's always been cosmetic this, or some traders come in and rub their shoulder and they've chipped something, and we've had to go back and fix it, and so on and so forth. So we're going to start providing that. So that's transparency.
Fantastic. That's really good.
Yeah.
Great. Well, I think we've got time for one last question.
Yeah.
You can share one more.
Yeah, last question was really just, it was a bit more personal, but I was just wanting to know a little bit about, I guess, what brought property into your life and why you decided to start working in this industry specifically, rather than, you're a showman. You can do anything. You can do anything you put your mind to it, but you decided to work in property, and specifically property. Why was that the vehicle that you chose?
To be honest, man, it was the same pursuit of financial freedom. I genuinely believe, I still believe that it is a hedge against poor decisions, and it's an accelerator of creating wealth. Like, you want it, like, I'll tell you, when I started the business, there was a point where I had to, I owed $45,000 or $50,000, and I've never owed money on my credit card, right? It was just delayed cash flow, registrations are not happening, fixed price contract. Now there's 50 grand on my credit card, right? Cash flow starts to come in, this and that and everything else. And you know what? For 1 second, I went to my broker and I was trying to settle another property. He's like, oh, you got to close this credit card. And this is very early. This is like very, very early, right? And no, there was a $30,000 balloon payment on my car and $50,000 credit card.
Oh, no, all at once.
All at once. Well, the balloon was due in, can't remember, this many, many years ago. And I go, what do I do? Like, do I get another loan? Like, what am I doing here? And like, I've already drawn down for the business and so on and so forth. And my broker just goes, didn't we buy that? Like, what are those 2 properties doing of yours? What's that address again? And he goes, okay. He goes, you know what we're going to do? We're going to refinance this. We're going to close the business loan. We're going to do this. We're going to do this. Dude, I didn't even feel it.
Yeah.
Like the consolidated debt with equity, and you might go, oh, you went backwards. Those properties have gone up another $500,000 since then.
Yep.
Do you get what I mean?
I can relate to that.
And it's almost a get out of jail card in a way. If the more properties you have, and if you're lucky enough to buy things a little bit quicker, like if you're faster at acquiring properties in a short period of time, and then you never buy anything else and you let them compound for 10, 15 years, oh man, wow.
Can be life-changing.
And the second thing of why I went and bought the properties I bought was I never had the money to go and buy $2, $3, $4 million properties. So the only play I could play was a greenfield play, because that is where I could still get access to quality assets with land, with blue chip developers, where the suburbs that I liked, that were closer to the city, and the reason I liked them because they had the parks, they had the play school, these things were going to be built. Yeah. The places they were built, I couldn't afford it. But these places that were going to be built, I could afford it. Right? And then rest is history.
Oh, fantastic. That's a good answer.
Yeah.
I can relate to that, but it's another story where I helped kickstart Mint Invest with the equity that I had.
Yeah.
And in fact, I actually paid LMI on one property twice to draw the equity, but that's the time.
I've done that too.
That's the story for another day.
Yeah.
Yeah, it's great. Well, this has been really good.
No, this has been really good. Thank you for having me.
Yeah. Thank you for being on here.
Yeah. Ethan, any other last questions? No?
What's the best way to get in touch with Mint Invest?
In the link below.
Hey, you stole my line.
No, thanks for having me, guys. Appreciate it. Thanks.
Cheers.
Thanks.